February 28th, 2025. Today is the final day of trading of the month. I'm starting this video a little bit early. I don't know what's going to happen in the last 30 minutes today. Probably nothing, I would say, but it's the last day of the month. And sometimes on the final day of the month, the market makes really dramatic moves. So you do have to keep that in mind if you're, you won't be trading when you're watching this video, but that is something you have to keep in mind. The day started, we had this really large move down, and you do have to keep in mind that the whole move down from yesterday should get some sort of second leg. It doesn't have to be immediate, though. In fact, we probably will pull back. I personally thought we might pull back a little bit deeper than we did, but you can see we got the first leg, a pullback, and then we got back below the low of this leg. So whenever you get a strong leg down like this that lasts whatever 30, 40, 50 bars, and then you get a pullback, you have to expect the market is going to get at least one tick below the low of that leg. And it's, this is not the same thing. I'll go over that in a little bit, but this is a trading range, right? This is a bear trend. So when you have a bear trend, you expect this is going to get a second leg. When you have three legs down in a trading range, one, pullback, two, pullback, three, I suppose you could call it four, pullback, four, and that is what reaches the magnet, you're probably going to get some sort of, reasonably good looking reversal. 48 for 950 is about as good as you can ask for the odds of getting a second leg. So bar one, it breaks below yesterday's bear channel. The bear channel is obviously important. There's a low probability that a breakout below a bear channel succeeds. Al's books say about 25% chance that a breakout below a bear channel is going to be successful. So you can assume, if you're going to sell the close of one, you probably have a 25% chance of success. And you're risking, 20 points. So you have to ask yourself, are you okay selling the close of one, taking a chance that we basically just collapse down below, but only really a 25% chance of that happening? Well, on that 25% chance, if you take it correctly and hold the whole time, you'll probably make a really good swing trade and it'll make up for the losses. But it's just difficult to take that sort of trade where it's very low probability. Two, a big bull bar. Once you get two, you can expect we're going to get at least a couple of legs sideways to up, since we do have, a lot of legs down. We've been selling off for 30 plus bars. So you have to expect we're going to go a little bit more sideways here, sideways to up for a couple of hours rather than just more to the downside. Bar three, consecutive bull bars, 2, 3, should get a second leg up. 4 is a pullback. So I look at 2 and 3 as a breakout and 4 as a pullback. And I'm expecting another leg up. 6, 7, and 8, a 3-bar micro channel, but I did not think it was all that likely that 6, 7, and 8. I thought I gave it, I believe my grading was 55, 60% chance that we get a second leg up. I personally like to take trades where I think I have a 70% chance of getting a second leg, or more ideally. I thought 48 for 950 was close to a 90% chance. I thought it was a 90% chance that 48 for 950 got a second leg up. So I'm going to talk about, obviously I liked this trade, so I'll talk about it more in a little bit. 10, a big bear bar closing near its low. Maybe it needs some sort of second leg, but if you're selling that, you're selling against 6, 7, 8, and 9. You're selling against 4 bull bars. If you're selling below 10, taking a chance that the second leg is starting, well, it's probably not. This is, 30 bars, and there's only been 10 bars in the correction. A lot of times you're going to need a similar amount of bars. If you get for sell-offs like this, obviously it's a little different with like wedges and stuff. When you get a wedge, the correction can be half the bars a lot of the time. But in general, if you're getting a big move, that's something based on a higher time frame, like on a higher time frame on a 15-minute chart, this is a bunch of big bear bars or something like that. Yeah, you can't be, if it's a 30-bar move, you can't be expecting it to resume after 10 bars, especially after 4 really good bull bars or 3 really good bull bars and a 4th bull close. 11 and 12 and 13. 13 is a bull doji. I know you can't see it on this chart, but 13 is a bull bar. It's okay. It's probably going to get a second leg up, but it might be a later leg is the problem. 11, 12, 13 is probably some sort of late leg, but we still might go at least a little bit higher. I did take, it's kind of funny that we just went the bar 66 low from yesterday. I did buy the close of 13 and I bought small and I scaled in and I made a scalp. I exited on the close of 18. I wanted to get to the 66 low, but it started stalling on 19, so I just exited. I took 4 trades today. So my first trade, I bought the close, I scaled in, I made money. My second trade, I made a mistake. And I actually want to talk about my mistake because it's important. So the overall regime is bearish, right? You have to be expecting, again, that this bear leg is going to get a second leg down. And I thought that 19, 20, 21, 22, 23, 24, this is a tight channel. And that tight channel is consecutive bear bars on a 15-minute chart. So just you have to visualize these tight channels as breakout bars, right? That's the whole object of why I say that they're that on a higher time frame, because you have to visualize them tight channels as consecutive breakout bars, because tight channels are consecutive breakout bars. And these breakout bars, 39.40, that's a tight channel on a lower time frame, on like a 1 minute chart, right? Yeah, there you go. Perfect. The tight channel. That's a really great example. So you can see how breakout bars are tight channels and tight channels are breakout bars. But I thought that this was probably going to get a second leg. So I was not as interested in buying any of this rally. We got another sell off 30.31, and I thought that might get a second leg, but ultimately this was probably still what needed the second leg. And this, I ultimately did not give enough credit to the bear case as I should have, and I bought and scaled in, and I ended up taking a loss on the trade. What I could have done, obviously, I don't think there was anything wrong with buying and scaling in, but 36 gave me a chance to get out of break even, and I did not take it. If I'm going to take a trade like that where it's relatively sensitive, buying a second leg when the bears need a second leg, buying a bull second leg when the bears need a second leg, not a good idea. If I'm going to take a trade like that that's relatively sensitive, I probably need to be a little bit faster to exit and use 36 to get out at break even. And that's really just going to come down to working on my study and calibrated expectations of what it is that I need to do in every single situation to get a deeper understanding of how breakouts work. Because I think that, I sensed in 35, I was like, oh, I'm probably in trouble here. This is a really big bar. And I did not get out break even on 36, but I should have. So the trade itself was, I think, a little bit of a mistake, because I think that I knew we were probably going below the 24 low, since this was going to need a second leg. And this is still controlling the market. So I wasn't that confident in the bulls for any of this rally until we got back below one, since I assumed we would get back below one. But yeah, I made that mistake. I sold the close of 40, and then I got out below at the low. So I got out below one during 46. The problem with buying above 45 is it's a really small bar, and it's probably not going to work. So that's a swing trade. If you're taking that, you're only winning it 3 or 4 times out of 10. You have to be okay with that. So it's just not going to work all that often. But if you do take it, it's not maybe the worst thing in the world, but it's a tight trading range, 43, 44, 45. It just seems difficult to take every single one of those trades. If you took that trade and you didn't take something like 19, and you didn't take something like, I don't know, 60, then you probably shouldn't be taking that kind of trade. 46, you can't really sell the close because it's 4 legs down. So 35 is a leg, 39, 40 is a leg. Obviously, 37 through 40 is going to get a second leg. So traders are selling the closes. Outside down 46 and follow through 47. We should go at least a little bit lower, but we could go at least a little bit lower with 40, 46, 47, but I'm not selling down here. It's 4 legs down, and the bears have accomplished their goal. It's a trading range, and their goal was to get below one, because this second leg, or the bears needed a second leg. So the bears' goal was to get back below one. So I'm really not that interested in taking a short down here. 48, a giant bull bar closing near its high. It's probably it's a leg one, right? It's a leg one, and leg ones are high probability to get leg twos. So you can buy 48, 49, 50 close, expecting a second leg up. I bought the close of 50, and I was looking to scale in. During 52, well, 53, sorry. So 52 happened, a pullback, and then 53 was rallying, and I thought that there was a chance that we might just go straight up. And so I bought a little bit more so that I would be in case we did end up going straight up. What ended up happening is the bar closes a doji bar. So why does 54 happen? It's an important thing to know. Well, 54 happens because there were bulls like me who were buying, taking a chance that we were just going to rally straight up. And then when it turns into a doji bar, there's still a really high chance that this gets a second leg. But now traders are accepting that it's not going to be immediate, and that it's more likely we're going to get some sort of pullback. So you have to be willing to scale in down here. And it's scary on bar 54, but the reality is 48, 49, and 50 is really, really strong. The bears have 4 legs down, and they completed their goal. And so the bulls should get a second leg. So I bought the close. I bought a little more here, and I skipped my first scale in because I added that piece higher in case we race straight up. I didn't want to have a tiny position. If I was smart, I would have exited. I was cooking. To be completely honest with you, I was making food, so I didn't quite see this bar close. But when I came back, this bar was forming. I scaled in more on here, and I bought more on the close of 54, and I had to stop. Not below 48. It was like 150% of this. The stop was somewhere down here. I was buying more on the way down. And I was expecting that the bulls get a second leg up, meaning we would get at least one tick above the 51 high. Thought it was possible we get to the bar 34 close, since the bulls who bought that close, although not good, they're doing a reasonable thing, continuously scaling in, and they should expect to eventually make money. So I just basically held through this, and I got out at the 51 high. I considered holding a piece to the 34 close, but ultimately decided it's a trading range day, and it's probably better just to be conservative on trading range days. And when you get your second leg, just take the money. I considered buying. So when I got 62, it's a 3-bar micro channel, but it's not all that strong. I thought that odds were we would pull back before we got any sort of decent rally. But I was hoping for a deep pullback, and I could buy a deep pullback of 60 through 62. I wanted to buy like 50% and maybe add at the 60 high. But we ended up racing straight up to the bar 34 close. So obviously that did not end up happening. This is a pretty good rally. This isn't working. There we go. This is a pretty good rally. And so assuming, I don't know what the next 3 bars, 5 bars hold, but if it just goes sideways to up, I would expect that this will get the second leg up on Monday. So it should control the market in some sense. We've been in a bear channel for a while, and we might be trying to get a trend line break. So if bulls can get a trend line break, what should happen? Well, we should likely retest back down. I don't know if we get all the way down here, but we should retest somewhere back into this area, and then the bulls could set up some sort of higher low major trend reversal or something along those lines. So getting a strong trend line break is important. And if we do get a strong trend line break on these last 5 or 6 bars, I would expect a retest on Monday before a second leg up. The daily chart, this became a second leg trap. It's important that this bar looks the way it does because the bears are now trapped. So the bears who sold this close are now disappointed in how this bar is looking, and they're buying back their shorts. It's kind of funny because you can see things on all time frames. If you were a daily chart bear and you sold the close of this bar, and you gave it a couple of hours hoping that we would race straight down, you came back and we were somewhere up here. So your entry price, if you sold the close, was here, and you came back and we're somewhere up here. Those traders were disappointed, right? Those bears were disappointed that, they sold the bottom of the trading range and we didn't race straight down. And so what they're going to do is buy back shorts. And so that starts with the rally right here. That's the beginning of the bears buying back shorts. And then obviously we get a couple of legs up. So it's, the time frames work within each other, which is always really cool to see. I am going to put on Globex for the daily chart just because I personally like to do that. Makes the chart more straightforward. We should get back to this low. The bears who sell this close are going to get out break even, though. We're not going to go. It's unlikely that we go straight up. So the bears who sell the close, and it's going to be uncomfortable most likely, but if they're really willing to scale in, they should be able to get a retest back down to this area. If we were going to go a lot lower, I think today would have been another big bear trend, and this would be the next support point. But for now, it seems like we've settled on a trading range between 6,100 and 5,800. So it seems like this is going to be the trading range. Assuming we get some sort of bull rally that needs a second leg, I think that would confirm that this is the trading range. The weekly chart. So consecutive bear bars, good for the bears, but obviously not closing quite near its low. A little bit disappointing if you're a bear, so a little bit more of a trading range bar. However, those consecutive bear bars are still going to get a second leg, but it's very likely that we get a pullback first. The monthly chart, as I was mentioning, it's not that convincing. If you trade for a while, you start to get kind of eager to see sell-offs and see how far they can go because, it's fascinating. I was trading in I started trading in 2018, 2019, somewhere over here. And I remember trading through COVID. It was really, really fascinating trading through it, just the way the market was moving. 1,000-point month is pretty insane. I don't think we've had anything all that close to that. But, this was interesting to trade through. And obviously it all ends up just being a really clean wedge pullback. So I'm always curious to see how far down the market can go. And it's always really fascinating when we have sell-offs, especially the rather large ones. But That's just, I don't think this is all that great for the bears. They had a chance to close the bear bar, closing near its low, and now it's just a tight trading range. So it's a tight trading range, short in a bull trend. Probably not going to go well. For entries today, or for trades, for you or for whoever, just reasonable entries. I already mentioned mine. You could have bought two. That probably made some sense. You probably could have bought 6, 7, 8, but not great because of this. Do you exit below 10? Maybe, but it's hard to hold, but it's hard to exit. So that's why it's difficult to buy in here, because it's not wrong to exit. Not really wrong to exit below 10. You still should get a second leg, but the pullback could be a lot deeper than it was. You could buy up here and scale in, probably try to get another leg up, but we're at 1, pullback 2, pullback 3 legs. So this is a fourth leg. So buying 18 doesn't make sense. You could probably sell 21, but against a tight bull channel doesn't make sense. Hard to buy 26, 27 because of the tight bear channel down. We should go lower. You could probably sell the close of 35, 39, 40, sell the close. And then buy the close 48, 49, 50, and have a good expectation that we're going to get a second leg up. Don't get scared out by 54. Buy more on the close of 54. And you could buy above 60, 61, 62, anything like that. So obviously it's a little bit more difficult to buy over here just because we've already gotten the second leg, and I thought this would be the target. But the higher we go, the more disappointing it is to the bears. Again, I think it's important if we get a really strong rally here that breaks the trend line before the market closes today. So if we can, get another 20 to 30, you could buy the close right now and just take a chance the next bar is a big bull bar, and then the next bar is a big bull bar. The context is okay to be taking a chance that we are getting a trend line break, but I would like to see the bulls have some urgency over the course of the next, however many bars are left in the day, 4 or 5. So if they start to fail, like it looks like they might be, if this is not a bull bar closing near its high, traders might start to exit. All right, that's going to be it for me for this video.